You're watching Reset with Vince Lanci. Stay tuned. Vince, so nice to see you this Thursday.
Nice to see you again as well, Daniela.
All right, Vince, we've seen so much activity in the markets this morning. Can you break down for us what we've seen in the past 3 hours?
I think that's really a good way to start because we're in a fluid dynamic market, or for the last 3 hours especially. The ECB lowered interest rates by 0.25, by 25 basis points. The markets, this was in line with market expectations. The euro strengthened, that was good, because the euro is now responding not to interest rates being lowered, but more towards sovereign risk being averted. So the euro responded firmly, the dollar weakened, and gold rallied. Gold acting actually as a risk-on asset. The market, all the markets reacted in a risk-on sort of way. The stock market was friendly to it. Gold touched 1760. That's an area that we saw as resistance, but it was definitely searching for stops. The market looked very constructive. And then the axiom first way, wrong way just popped out of nowhere and everything reversed. The dollar is up on the day, the euro is down, copper is down, gold is down significantly, and stocks have taken a beating. So whatever the markets perceived for the first hour following the ECB's decision at about 7:45 a.m., they have changed their minds, and things do not look very good right now for the risk-on crowd.
All right, Vince, didn't want to talk about Europe.
No, I don't want to either.
But since we can't avoid it, would you say it's the most important factor weighing on the price of gold?
It unfortunately it is, and just to try not to use the word Europe for the moment, it's what we're looking at here, whether it's Europe or anywhere else, is the markets are being driven by headlines. And this is a big headline week, and Europe happens to be the driver of headlines. So we won't give them credit for driving the markets. We'll just say the headlines are driving the markets. And the ECB interest rate cut is a headline. The big headline tomorrow will be whatever comes out of the Euro Summit alphabet soup meeting. So it is fair to say that Europe's actions or lack thereof are what is driving the macro moves in the markets right now.
Vince, are you optimistic for the results of the meeting tomorrow?
No, but maybe you should be contrarian and you should be optimistic, because I've been optimistic for a while. I think the bottom line with the Euro Summit meeting tomorrow is that if past is any prologue to future, they'll come up with some sort of a solution. It will make the markets happy, and the length of time that the markets are happy or tolerate Europe's ability to actually follow through on what it says it's going to do will be shorter. So we think the markets are not going to be too happy with what Europe says tomorrow. It won't have a lasting effect because there's no closure. All
right, Vince, technically for gold, what are you looking at?
Okay, we had been looking for, it's almost shameless. It's almost a shameless plug, but we have been looking for the market to hold the 50-day moving average. And from there, as a trade, a buying opportunity up to the 1755 to 1770 area, and I had been saying as much in our reports. 2 days ago, the market touched 1705, and that was the 50-day moving average. It held it beautifully, and we were very excited and very constructive on the market, expecting follow-through up to 1770. The market opened up last couple days, very constructive. We saw fresh buying. We saw gold move on its own accord. We saw the market hold very nicely in a consolidation pattern following a big December contract rollover. The market has its news come out today, goes up to 1760. And boom, we're totally disappointed. I mean, technically, it did the right thing, but as fans of the product, we're bummed that it didn't go through that area. On the way down now, this is what we're looking at. The moving average is now 1709. We think between 1709 and 1700, as a trade, you might want to buy it. Below 1700, we're not happy. We don't think there'll be a lot of buying left if it goes through that area. However, if you're an investor, you're a fan of someone like Jim Rogers, you're wishing for 1600, because when it's over, they will print money. And when they print money, fiat currencies will continue to circle the drain. So as a trade, you're a buyer above 1700. As an investor, you're a buyer in the 1625 area.
Vince, what scenario would be needed in order for it to hit 1600?
You know, it's hard to say. The markets are getting very emotional. And by emotional, I mean, if you're a European bank right now, you have a dollar funding crisis. And what that means is you just need to get dollars on your sheet, on your balance sheet, to shore up downgrades by the S&P. The S&P has, I believe, 17 countries on its list for downgrading. So you're selling everything that's denominated in dollars that's not tied down. You know, if you own a Cadillac, you're selling it. You're selling whatever you can to raise dollars. So we believe that gold is an irrational sale right now, meaning it should not be sold. And that's why we don't want to, as contrarian as it sounds, that's why it's ridiculous to be selling it right now. But we can't bring ourselves to buy it because it's acting irrationally, or the European banks are. Bottom line is, for us, bets are off on how low gold can go, but we're just going to average in and just buy it all the way down. That's the way we would approach it.
All right, Vince, thank you so much. Final thoughts for investors for the rest of this week.
If you're trading this market, you should be cutting your volume and you should be widening your stops. If you're investing in this market, you should be investing in gold. You just have to pick your levels and make sure you're not risking capital you can't afford to do without for a while.
All right, thank you so much, Vince. We'll see you again next week.
Thank you. Take care.
And thank you for watching. As always, you can email me your comments and questions at newsfeedback@kitco.com. For Kitco News, I'm Daniela Camboni.